Hello, today is Saturday, 29th of April, 2023. As always, we'll start with our disclaimer. We'll go over our calls, we'll make some predictions, and because it's the weekend, we'll go over the long-term picture with a possible different price target which could work. Well, this is my trading plan for Monday, which is May 1st. Remember, I can be completely wrong. Any trade you make should be at your own risk. May 1st is May Day, which is French for help me, and I think there's a possible top then, so the market might be crying May Day, but let's look at the reasons why and the possibilities. On Friday, we looked for the pattern with the early low. It tends to be a rally day with a high in the final hour. We got that. Monday's pattern should also have the early high. We had a price target from the 20th of this month. We'll cross off the list, 41.4509, support right there at the target. In the morning, MEJT gave a signal that higher price it would print, but the minimum target printed immediately. Nothing requires us to print more than the minimum, but it doesn't prohibit it either, and we certainly did. We got something at this top here. It's saying it was a false move. It gave a MEJT plus 4 sell signal. I discussed it in my book, but it doesn't have the same degree of accuracy as my other signals, so I didn't put it in the webinar. And even though it doesn't always work, it certainly worked on Friday. MEJT did say that this drop wasn't for keeps, and then we recovered. Now, we had the day's low in the first 5 minutes and the day's high in the last 5 minutes, and almost always you're going to trade higher Monday when that happens. That's a bullish pattern. But it doesn't mean you're going to close higher, and it doesn't mean you're going to open higher. This actually is a weak pattern in my estimation, because after rallying all day with just a few minutes left to trade, we were under all these highs. And the fact that we broke through in the last 5 minutes doesn't mean much to me, because big money isn't going to wait to the last 5 minutes to put on trades. So this is wall into the close. Usually it's not smart money. Now, of course, if we gap up, all that negativity goes away, and we're not going to know that until Monday's open. But for right now, this is suspicious, and even though I think, or I'm almost certain, we're going to trade higher on Monday, that doesn't mean we're going to open higher. But I think if we do drop early, and getting down after a move like this is quite plausible, I think we'll recover. That doesn't mean the recovery is going to hold. Well, this is Tom DeMark's TDST line. That's resistance. It goes 1 bar past the line. And here's the upper Bollinger Band. That's resistance. Here's the 89-week moving average and Tom DeMark's TDST line on the weekly chart. Those are resistance. We have a strong rally too, but not through resistance. This is the monthly chart. This is the 20-month moving average, and that's resistance. See how we stop right there? It tends to separate bear and bull markets. So if we break through in grand style, then we're in a bull. But otherwise, that's about as far as a bear market should get without having some kind of correction. Well, this is the count I've been using. As I've said, it's not the only count. On my last video, we made a case for a top around 41.86, and I'm going to stick with that. There's no reason to change that. As far as the general idea, we've completed this wave we've completed wave green C down in terms of price, but not in terms of wave structure, and we need a blue C to complete it. Now, that's not the only way to count it. I was counting it this way because gray C and gray A have a good fib relationship, but it's not the only way to count it. You could count this as blue A, blue B, and blue C down here, completing green C. that would keep the same idea that we're still in wave C and that its low price is printed, but the wave structure is incomplete. We'll go over that count later on. We had this big drop last week. We said one of my trading rules is you have an upsloping line, a straight line break. He said this should be completely recovered and we should go back to this line. For all intents and purposes, that's already happened. But that doesn't mean we have to stop here. I would like us to travel just a bit higher and actually hit the line. And if we hit it Monday, it'll be in the 4180s. But let's not also forget that we broke through this red line, which is Gian fan line. That we've broken out of this channel. We've confirmed the break by trading under this close. And so far, all we've done is do backing and filling up to this channel, which is resistance. Now, resistance doesn't have to hold, but it is resistance. And we do have a valid break through this line. So until proven otherwise, I'm going to look for us to stop at resistance and go down through this line. Doesn't mean it has to happen in a day. Well, I don't think this is a clear count, but at least there is a count where you can count this wave as being over. If this is an ending diagonal triangle, it doesn't have to end right here, because when you have a triangle, it doesn't have to have a good fib relationship between C and A, but at least it's compatible with us being in the last leg up. Let's take a look at the other count we talked about. It's possible to count this as blue A and this as blue B, and we're making an A, B, C to complete blue C. And the reasoning behind this is if this is A of blue C, B corrected exactly 61.8%. And if that's the right count, we shouldn't go higher than that. You get one shot at going back up 61.8, and that should be it. So if this is the right count, ideally, we shouldn't go over this high, which is 41.95.44. So if we're looking for a top around 41.86, and there's a reasonable stop 10 points higher, at least you're not risking much if I'm wrong. Now, if this is the right count, you'd like wave gray C to have a fib relationship with gray A, and you'd like blue C to have a fib relationship with blue A. So if you take A, you'll see C is going to wind up around 37.55.77. And if you take A, C has a fib relationship pretty close to that, 37.41.85. So that's about a 16-point range. And what I like about this is there's a MEJT target to 37.75.69, which I would like to see print, and there's support under that number. So somewhere in this area, under 37.75.69, probably somewhere in the 37.50s, 37.40s to 37.50s, the waves do balance out. Now let's take a look at the longer term picture. Suppose this wave ends around 37.56.93, which is this number here. It's within the range, and if you take 78.6% of that range and you measure the height of wave green A, that hits it on the nose. So it doesn't mean it's the right count. Doesn't even mean it's the only count, but at least there is a count other than the one I had around 35.22. This one's in the middle 3700s, which would have balance of the waves, and there may be other numbers that work too. These are the patterns we expect next week. Monday's pattern has the early high. We could gap down. We're nearing strong resistance from here into the 4180s. If we're to rally on the beta, we should gap over resistance or expect moves past there to retrace. Remember when you rallied to a line of resistance, we showed in that channel, you either gap over the line or the line wins. The wave count from today argues for us going past 41.95.44. If that works, there's wave balance in the 3750s, give or take a little, which could end the decline if we start a decline this week, which isn't a given, but I think it's very likely. Friday featured the low day and the first bar high day, and the last is nearly always leads to higher prices Monday, regardless of where we close. The timing of the late rally makes gapping down plausible nonetheless. The ideal situation for bears is to gap down, rally to a new recovery high near 41.86, and then drop under a morning low. So if that happens, we could be in free fall Tuesday morning, and the volatility index has given a Bollinger Band reversal sell signal, even though it's a weak one, so that's entirely possible. The ideal situation for bulls is to gap up strongly. I think the odds are against it, but nothing's impossible, and trying to call ends of trends as a risky game shouldn't be played without stops. I mean, if we gap up really strongly on Monday, I mean, all bets are off, because the scenario I laid out has us topping out not too much further over this high. Certainly less than 1%. And if we break through that, then this might not be the right idea. But I do think we're near the end of the road for this rally, and if I'm right, it could be a way down into the 3700s or even 3500s, and we'll have to see if that works. It's a pattern with the early high Monday, and that's today's call.